afternoon, traders, and welcome to Pre-Market Info. I'm Dennis Dick.
And I'm Joel Elconin, and we're going to do our market recap and take a look at our good calls and bad calls. Volatile week in the market as it started out looking ugly, but Draghi came to the rescue. We'll discuss both our good calls and bad calls and discuss what we can learn from our trading mistakes and a look ahead to next week. Can the bulls stay in control?
They're certainly in control right now, 1383, but they weren't in control earlier this week. It was looking ugly early in the week. We were breaking down the first 2 days. We made that low on Wednesday, and it was looking pretty ugly.
And they had us hook, line, and sinker, starting with the banks on earlier in the week, and your call on Goldman Sachs.
Goldman Sachs breaking down as well, trading 92.65 here in the pre-market. Stock doesn't look pretty either. Yeah, the stock didn't look pretty back then. It really didn't, Goldman Sachs. We go to the 5 days, but I do have egg on my face. I was saying doesn't look pretty at 92, obviously. That was wrong. The stock's been straight up 9 points since then. So those banks had us suckered. I even put the title for that show, Ugly, Ugly Banks. I guess I should have said Tasty, Tasty Banks or something because I was dead wrong on that one. But you weren't all that bullish there either. I'm going to play a clip here just from the Wednesday actually as well, where you weren't very bullish either.
Look, maybe a couple more bucks out of this, but this is a bull trap.
A lot of air. You were calling a bull trap on the overall market here when we were sitting at 1340. Wasn't a bull trap. It kept running. So I know I was fooled by it too. We were definitely, the Draghi thing got us, news happens, and that's what happens. When news happens, it gets tough to predict where this market's going to go on a technical basis because when fundamentals come out, technicals take a back seat.
And if we would have just stuck to the charts instead of our opinions, we would have noticed. We noticed now the S&Ps came down to the lower end of that range. We've been treading above that 1320 level, been holding there since mid-June. We bounced off there, went up to the 1375, came back down again. I don't know. You think Draghi was looking at the charts?
He maybe wanted to put in that double bottom, and he sure did. He says, hey, we got a double bottom this booze. Let's come out and give some good comments here, and we'll keep this market rally going. And that's just what happened. 1383 trading at right now. What a week for the market. Looked very bad early. Very good right now. Can it hold up is going to be the question. But
you also had the Apple earnings too during the week that were disappointing to set things down, but the market just seemed to shrug it off. But we also had some decent calls on so the bear side. I mean, not all stocks go up even during a big up week.
Yeah, well, Whole Foods you actually had. We both were kind of all over this one. I'm going to play a little longer clip for you because we both had a pretty good call on this one where we seen this stock here was falling off and we said, look, if it gets back to this 95, there's going to be sellers here. And actually that day it opened at the high. I'll just play the clip for you. Obviously, we broke down. We rallied this whole thing back, so we're coming all the way back up. You're trying to tell me there's some people sitting on some losses right now that are just, thank you, thank you, thank you. I will sell this and not buy it ever again.
95 and a 12, 95 and a quarter were your highs back from July 13th and July 16th. Hasn't quite got there in the pre-market yet. We did get to $95. I don't know who would buy this thing at $95, but that's a pre-market high. Leave it alone, but if it breaks down below 94, get out of the way.
That was a great call. You were saying if it breaks below 94, that Whole Foods, it broke below 94 and fell to 91, or 91.81, so a couple of points. It has rallied back up there since, but still can't get up to sniff that 95 area. So just as we suspected, there was sellers sitting up here perched that were sitting on those losses there, Joel.
Yeah, and actually, I think your call of the week really had to be in Starbucks. We've been talking about that stock for a long time. Of course, earnings really swayed things, and even a blind squirrel can find an acorn every once in a while.
like kind of this cliff that we've climbed for so long. Not saying Starbucks can't continue to climb this cliff. I don't know how big it's going to be, but I think eventually it's going to end ugly here, and it did end ugly here for Starbucks stock having having a horrible day here today. It has bounced off the lows, trading 47.70, but this stock, I haven't been a big fan of Starbucks. I've been saying it on the show multiple times. I'm just not a fan of the stock. I've talked about this run that we've had from this whole $7 area back in 2009 to $62, which in my opinion is completely overdone. And everybody that's saying it's a value stock here, I think there's a lot of air still below. Not saying it's going to continue to move here. It's always hard to say, but I guess I got it right here in the short run.
Okay. Also, just on today's show, you talked about some various opens. Merck had some good news.
Right.
Had looked at that $44.95 to $45 area as a potential area of resistance. Did get a decent trade off that. It did decline off the open. Subsequently has rallied back, but there's just a thing where you keep an eye on the pre-market activity.
It was a really interesting open today. I actually did catch the Merck on the NYSE Open. It opened at 44.95, right at the very high. I got short there on the opening print because I knew that 45 was a big number, big institution there. He's gone now, been taken out. But I knew that there was, going to be some high-frequency sellers in there. Opened right at the high, and by the time I brought it up 5 seconds later, like I got the fill, I go to it. I was already up 50 cents in the trade, so I just cashed out right away for the quick 50
You
cents.
couldn't take a dime out of it because it went down so fast.
It
right?
was so fast. Yeah, I know. Otherwise, I would have only got a dime. But I went down so fast, and it actually kept falling a little bit there too. What was the low there today? It got down to 44.23, so I could have got a little bit extra out of it. But it was a shocking open, and this was an interesting thing that happened at the open today. You had the NYSE opening indications were all kind of wrong. They have these opening indications that come out on the NYSE stocks. They come out at 9:28, and they keep adjusting until the 9:30 open. And it tells you what price it's predicted that the market crossing price is going to be, where the NYSE open is going to be. And for stocks like Merck, it was calling it in the 44s and then or in the 43s even, and then all of a sudden it just opened at 44.95. And the same thing for EMC. It was calling EMC to open down at, I think it was 25.40 or 25.50, and then EMC opened at 25.85 and caught all those high frequency traders that were playing that off guard. And Pepsi too, there was a huge sell imbalance. It was calling Pepsi to open down at $70.51, and it opened at 71.25. So that really caught a lot of traders by surprise. You had this little opening spike thing here that was happening, but crazy opens. I don't know exactly what was happening, why the opening imbalance, because those are usually pretty accurate, not the imbalances but the actual indication price. Usually a couple seconds before they open, they're pretty accurate, but they were right off this week or today. And those bots that do that arbitrage between that opening indication price and the actual ECN price probably got hurt.
I'm looking for. It's funny. I'm looking on the days range on Yahoo. I have a low of 43.57. I'm looking on my trade station. I see a low at 43.46. And then what did you quote there as the low?
44.23 is the low. That's the low that happened on the NYSE. So that's the New York low.
I bet you some market makers had some market orders, some big sellers.
Oh yeah, they got.
And they wanted to jam them. And they probably printed them at a price that it didn't even trade at on the primary.
Oh yeah. Well, and this is the thing. Because you're looking at the 9:30 open, but it didn't open on New York until a few seconds after 9:30. So there's trades going off, and it was indicated. And what was the low that you had there? 43 what?
Well, on my trade station it says 43.46.
Yeah, and that's because, and that's exactly it. That's because the stock was actually trading on those ECNs at that opening indication price, but then opened at 44.95 and caught. So those bots are selling it down there, thinking they're selling 43.70, 43.80, and selling it and keeping it down at that level because that's where it's supposed to open. But then open at 44.95 and screwed them all.
Or
So
that's where they printed their sellers. And
yeah,
I even trade. It's funny. That just shows that the fragmented market structure. You have one low on TradeStation, you have one
yeah.
low on Yahoo, and then you have another low on the New York Stock Exchange. Unbelievable that you have that kind of fragmentation. I just wanted to close out the show. A lot of times we're skeptical of the Wall Street pundits and their upgrades and downgrades. I don't know what this guy was thinking, but he downgraded Exxon
Right,
Mobil
right.
today, and you just had a good feel on that one. That if it traded in the 85 area, and it actually, Dennis, it only traded a couple cents below the close. So on these up days, if you could pick a strong stop up at near the close or the previous day's low, as evidence here in Exxon Mobil, you'd have a pretty good trade.
Yeah, I had a good one in that one there for sure. You actually were pretty good on the overall market too. On the E mini, you were saying if we got above this 1364, there's really nothing until 1376. So any of our listeners that were able to play that little vacuum area, it was nice that you alerted to them. So really overall, our market, we weren't very good Monday, Tuesday. You're listening to us Monday, Tuesday, you're like, these guys are idiots and don't know what they're talking about. But if you listen to us today and yesterday, we did quite a bit better. So that's the way it goes, folks. It can't be right all the time. You can't be wrong all the time, but it's fun. Where do you think this market's heading next week, though?
Oh, holy moly. I'll have to see. We're closing strong. We're closing on the highs. I mean, basically, I don't see anything stopping this to going to 1400, which is only a little ways away.
Right.
And then you have the high back in March at 1413 and a quarter, basis the front month contract in the S&Ps. Not much standing in the way of that. We've got a lot of the big boys' earnings coming out. You do have some of the for the mid
A
caps.
lot of mid caps next week. A
Yeah,
lot of the big boys we've had, but we have a lot of mid caps there coming out next week. Tons of stocks. So your mid caps maybe going to be your driver there next week.
yeah, and then you got Big Bad Ben next week stepping up to the plate. It's funny how you can interpret the news. We did get that spike midweek when they announced the possibility of QE3, but today when the GDP came out, oh, no one was bearish because the economy's not weak enough to do QE3. It's okay on its own, so we rally.
Yeah, interesting week, a volatile week. Hopefully you traders had a good week, and we will catch up with you guys on Monday.